Members, I hope every single one of you is having a great morning, a great evening, or a great afternoon, depending on whichever part of the world you're at, ladies and gentlemen. If you check the current time from where I'm at on my current time zone, it's 57 minutes past 9 p.m. It's Monday today, and the date is the 15th of February 2021. Right, so first and foremost, guys, what I want to direct your attention to is this session is actually a continuation of the Zoom class that we had. Unfortunately, due to an internet connection instability, there were some difficulties or technical difficulties in terms of our audio quality and in terms of our video quality. So I decided that with the session that you already had, why not just like record a new session just to continue on and cover up some of the key points that could have been missed on that Zoom session due to internet instability. Now, this session specifically, guys, is dedicated to educating you guys about the importance of top-down analysis and understanding what top-down analysis is all about, right? So now I'm just gonna put some writing. This is actually like point number one. We use top-down analysis, and I'll explain to you guys very soon what top-down analysis really means. So top-down analysis, guys, this simply means every time we do an analysis on the market, this is actually get a spotlight. Every time we do an analysis on the market, we always analyze from the biggest time frame to the lowest time frame. But how do you determine if a time frame is bigger in relation to another time frame? So I'm definitely gonna have I don't know if you should do it like as in A, right? We should have like A, and then we should have our B, and then we should have our C, right? So on point A, we're gonna have the monthly time frame, right? The monthly time frame is the biggest time frame, followed by the weekly time frame, and then also the daily time frame. And I'll like in terms of top-down analysis principle, you'll notice that the reason why we have to go through each of these time frames is due to the fact that all of this time frame means a different perspective on the market. Now, specifically on the monthly, what we're looking for, I don't know if you can be able to edit even from here. Specifically from the monthly, what we're looking for is we're looking for support, right, and resistance. We're looking for support and resistance. And then on there, I'm just definitely gonna extend this to make it a little bit bigger so you can accommodate those texts on front there. So overall, now once you have your support and the resistance from the monthly, on the weekly specifically, we're looking for the main key point here is actually direction, and that direction means is it either going up or is it going down? Like that's simply what direction on the market means. Is the market, because at the end of the day, you want to align yourself with a trend, right? You want to align yourself with a trend, and the best way to know if a trend is taking any particular direction is to determine what's taking place in terms of market structure on the weekly. Now on the daily, this is where we look for key levels, right? On the daily, that's where we look for key levels. Remember, direction on its own, it's simply what you call trends, right? So it means the use of what? The use of trend lines is actually applicable to the daily time frame, the weekly time frame as well, right? So it doesn't mean for as much as like monthly time frame from top-down analysis, monthly we only look for support and resistance. Weekly we look for direction and trends, right? And then that direction is going to be a result of knowing where the support and the resistance is at, and it's also going to be a result of knowing the key levels, because all these time frames do overlap. That's why we put all of this under the category of what? Of bigger key levels or bigger time frames on the market. Now let's take this all into the chart, and I want to show you, and maybe specifically just to analyze let me put this one here, just to analyze a chart that many of you guys are familiar with. This is Nasdaq US Tech 100 on the 5-minute time frame. That is not top-down analysis. Top-down analysis means we go to the monthly time frame first, right? So how do we find our monthly support and our monthly resistance? We compare the previous 5 months to determine it, not the previous 12 months or the previous. At the end of the day, look, if you are on the monthly like you are right now, what else are you seeing? You can see that you have your low, which was actually currently around these levels at 4,600. And if you go back in terms of years, this was 2016. Some of us in 2016 we were already trading, so it means it's a price action that is relevant to us as well. So we can't like exclude it, but it's not relevant. We know this is where the trend started from, right? So as we calculate about percentages of this entire trend, because if a trend started from here, let me put about this line. If a trend started from this line because it came from a resistance and then eventually consolidated a little bit, which is an accumulation phase, eventually impulsed out of that and formed a new what? A new trend. So if a new trend formed here, the current trend, even though it's a result of this, is not that much like highly implicated by this support as it is by the key levels that are in between. That's why top-down analysis, we don't look at one time frame. Now, while we still at the monthly, the main key point to look at is you already see that, okay, so far if my support is down here, to a certain degree, I'm already doing what? I'm already seeing the direction. The direction it means it's an upward direction, it's an uptrend, right? But that's not the way we plot the trend line, because the trend lines are relevant only to the weekly time frame. So while we still at what you call your monthly time frame, you compare your previous 5 months. Why do you compare the previous 5 months? Is due to the fact that, come on guys, you can't want to compare the previous 12 months or previous 24 months if you have at least about the previous 5 months to compare with, because the current month is definitely going to be a result of the previous what? Of the previous 3 months, at least, or about 5 months in maximum. And that's the point, is if you look at even all of this chart, you can't see 1 month of a candlestick engulfing either as a bullish momentum or as a bearish momentum. Engulfing means, you know, when you engulf something, it means you just taking that thing, gulping it inside of your mouth. It's like you can engulf a strawberry. You can engulf, instead of biting a strawberry pieces by pieces, you can just engulf it into your whole mind, into your whole mouth, right? So now the point is, if you look at many of these candlesticks on the chart, there is no so many candlesticks on the monthly time frame that just takes over. You don't find one candlestick taking over 5 months of candlesticks. Even if it can be a small consolidation, you don't find one candlestick alone just engulfing at least about 5 months of growth. So which means comparing the previous 5 months with the current month, it's actually the best way to start. And the best way to start with that is to look at the previous 5 months, the high of the previous 5 months. For in this kind of scenarios, we have the current month is this one. The low of it is here at 12,818, right? But the high of it is actually at what? At 13,918. That's many pips there, from 12,700 or 12,800 to 13,000. That's over 1,300 pips, right? Because it's a monthly time frame anyway. Because this 1 month alone, I can cover it for you. To see the importance of top-down analysis. So basically what you're covering, the blue region, is just only 1 month of growth. It's 1 month of performance. But look at how big it is on the smallest time frame. Do you see this? This is the importance of top-down analysis, because if you knew that the monthly candlestick, if it opened low as here, right? If you knew it opened as low as here, and you knew that it's going to be a bigger one on the monthly standpoint, then it would have allowed you only on that one monthly candlestick to hold up until this long. That's over, a lot of money that you have never made in your job, or whatever the case it may be, in just one candlesticks. But I know it's easier said than done, right? Which is the reason why I'm teaching you this, because I know it works, but it takes patience for someone to materialize this. It's all magic. Like once you're actually able to grasp it and actually know how to fully use it, it will be like you have some supernatural powers, I'm telling you. But anyway, it takes patience, and everything that like is supernatural, it takes powers, because it takes patience, guys. It's all part of nature. Everything supernatural. Nature is supernatural on its own. So the previous 5 months is 1, 2, 3, 4, 5, right? Do you get what I mean? 1, 2, 3, 4, 5. So 5 months, the high of it, not the wick. I told you, you see the sticks in between the candlesticks, guys. A candlestick is this entire structure here. It has a high, it has a low, it has an opening, and then it has a closing. But the volume which we are interested in is the one that is only on the candle body, or from opening to closing, opening to closing. So far, the previous 5 months only closed up here. And this small red candlestick. Some of you know it as a pin bar, which signal more kind of an order block. Because if you put the Steve Murrow beat the market maker strategy, this will be the last bear candlestick. Once price is able to maintain it below this region, right? If it's able to maintain it below this region from 12,900 and 12,750, all that will do is for it to continue going all the way down. But right now it's not the case. Right now it's above. So does it really mean it's going to continue going all the way above? We don't know. So let's look at where our support is at. The support is actually going to be at the previous 5 months low, because we're actually on the monthly time frame, which is going to be 1, 2, 3, 4, 5. The low of it is this one. We don't have any other low other than this one. So it means our resistance is this one, and then our support is this one. So how do we know if, since when we are above the resistance, if you're going to continue going up or if you're going to continue going all the way down? Guys, I'm going to continue this session on the next episode because I don't want to make this session long. I'll keep them 10 minutes long, and then we'll continue on in the next session. Just following on what? Following on monthly support and resistance, since we're still looking at it, and then on the next session we'll delve deeper into direction of an upward trend lines and the use of them, and then maybe the third session it will be the use of key levels. And as you're going to continue using the small time frames such as 15 and 5 minutes to show you how you can get all those entries by understanding the direction and the structure of the market. Peace out.